thank you everyone for joining us this morning, this afternoon, this evening for me. We have people from all across the US and Canada. Mostly this webinar is going to be geared towards, the impact of Trump's tariffs on Canadian dental practices, but I think even if you're running a practice in the US, you're going to get some very interesting tidbits and knowledge and stats that definitely apply to your practice as well. Joining us today, we've got, Bill Henderson and Dr. Bernie Dolansky. I'm sure most of you already know these two gentlemen, but for those that might be new to our webinars, let me just give a quick introduction to our guests and why you should listen to them, because they've got between the two of them, decades of experience, and I think you're going to get a lot of value from today's talk. So Bill Henderson is recognized as one of Canada's foremost experts on dental practice valuation and sales. After spending the first 25 years of his career in the senior executive positions at Fortune 500 companies, including P&G and Invesco, Bill bought Tier 3 in 2008 with a group of partners after a disappointing experience with the appraisal of his spouse's dental practice. In the following years, he built the brokerage from a small Ontario presence to a leading national brokerage with operations from coast to coast. And in 2021, Bill sold the business to Henry Schein, but he remains on as an advisor to management, and he serves a select group of dental clients. Thank you, Bill, for joining us. And Dr. Bernie Dolansky is a distinguished endodontist and a dental industry leader with over 5 decades of experience. He earned his DDS at the University of Montreal, completed his specialty training at Northwestern University before practicing in Ottawa for 37 years as a founding member of Associated Endodontists. He's held top leadership positions in Ottawa, the Ottawa Dental Society, Ontario Dental Association, Canadian Dental Association, and the Dentistry Canada Fund, and played a key role in developing the CDA Net. Recognized expert in dental economics and practice transition, Dr. Dolansky has served as a consultant to major corporations, negotiated on behalf of the profession, and lectured nationally and internationally. He was a former senior national partner at Tier 3 brokerage, and he now works with senior transition consultant, advising dentists on practice sales, valuations, and strategic growth. Thank you so much for once again joining us and sharing your thoughts. So it's been chaotic for the last couple months. Ever since Trump is in office, there's tariffs, they're backpedaled, and they're threatened again, and they're backpedaled, and I don't even know where we're at this week, whether there's tariffs or not tariffs, or what the next one's coming down. But it's a very unprecedented time right now. And I'm curious to, this is not the first time the dental profession has gone through some, unprecedented times. I'm curious to see, in the past, couple decades, when something like this has happened, how has the dentistry profession fared? How has it been impacted by economic uncertainty? Before we answer that, I'm going to put up a quick poll just to see what our audience thinks, about the current situation, and then we can dive into some stats, about what's actually happened in the past with the dental industry. Let me put up a quick poll for everybody. Yeah. So, how do you think the current uncertainty and a risk of economic downturn will impact practice revenues in the coming years? So it looks like quite a lot of somewhat concerned or very concerned. The vast majority of people. One person's optimistic.
I like that person. It wasn't me, but I am.
Okay.
Can you show the numbers, or can you just read out what the rough percentage is?
So, about 56% are somewhat concerned. They think revenues could drop by 1 to 5%. A third of people are very concerned that it can drop a lot more than that. And then we've got one person who's very bullish on the growth, and nobody's neutral. So, but most people are concerned. Yeah.
I like the fact nobody's sitting on the middle of the fence. Okay.
So what do you guys think? In the past, what's happened?
Yeah, that is a great lead into the one prepared chart I have, and the reaction we just got with varying levels of concern from somewhat to very concerned, I would say is what we're hearing a lot of these days. But the key thing for everyone watching to understand is that this would have to be an economic collapse unlike any we've seen in the last 45 years for it to impact your practices in a material way. Nick, if you could put up that graph I sent you. What Nick's going to put up here shows the, hopefully that you can see that on your screen, everyone who's tuned in. This looks at the last 45 years of dental revenue growth. The Canadian Institute for Health Information publishes dental expenditures each year. If the bar is, and then the yellow blocks you see there are since 1980, every economic slowdown or recession we've been through. There was one in 1980. That year, dental revenues grew 16%. There was one in 1982. Dental revenues grew 14%. There was a real slowdown in 91, 92. Dental revenues were up 8% the first year, 5% the second year, and so on and so forth. Indeed, across this whole chart for the last 45 years, there are only 2 years where dental industry revenues declined year over year. The big one, obviously, was 2020, when your offices were all closed for 2 to 4 months. And of course, revenue dropped that year. But if you look at the bar beside it for 2021, averagely over those 2 years, things were growing. The only other decline was in 2010, and it was just 2%. And that was after what ended up being called the Great Recession. Many of you will recall the collapse of financial systems around the world, significant job layoffs, etc. So when you look at all of the accumulated history, it shows one thing very clearly. Dentistry is recession-proof, plain and simple. It's why companies like Dental Corp and 123 and all their private equity investors are investing so much. And indeed, right now, they are getting more aggressive again because dentistry is a wonderful safe haven for investments. So, I understand the concern people are feeling, but the data tells a very different story. Now, there'd be some exceptions. If you're an orthodontist or somebody who's got a practice heavily skewed to implants, which are more discretionary procedures, these numbers wouldn't be overall representative. But for the average GP out there, this is what the industry has done cumulatively. So, Bernie, what do you have to say about that? You have lived a bit more of this than I have.
I've lived it, and like my colleagues, most dentists, whenever there's an economic downturn and scary headlines, doom and gloom, like I was not as informed then. Maybe I got a little older, maybe I got a little wiser. I doubt if I got any smarter, but I am better informed. And you said that we're recession-proof. We're almost pandemic-proof. Yet you literally have to close dental offices for revenues to drop. It's phenomenal. The only thing I would add on the negative side is the effects of Trump's tariffs will probably be somewhat geographic. If you're in a auto town, a car producing town, steel producing town, those overall statistics won't help you if people are laid off. That is an effect that will definitely influence dental practice revenues, but overall, I expect that history will repeat itself, and that graph that you show will, when we look back at 2025, it'll show some growth.
Now, the economic, like the reality of how much of an impact it has versus how much people think it will have. I mean, people are emotional; they'll make emotional decisions, right? So, with all this economic chaos, the threat of tariffs, has that had an impact on practice sales, practice valuations?
The economic uncertainty absolutely has. But we have to look at some bedrock things.
Well,
the
Bernie,
Canadian-
sorry to interrupt, but I'm curious to publish a poll here to see what people think before you give them your
Yeah,
opinion.
I'd love to
That
know
way
what
they can
people think.
backpedal.
Before I share what I think.
So, curiosity here, over the next 1 to 3 years. Yeah, before you give them the answer, I'm curious to see what
Yeah.
people have to say, whether it's going to have an impact or not.
Well, the answer will be my experience and Bill's experience, and that's pretty good when it comes to selling practices. It's what we do. Or try to do.
Out of
right, Bill?
hundreds and hundreds of practices sold.
Yeah, we're doing, as a company, we're doing over between 80 to 100 a year. And Bernie was one of the very early partners who helped grow the business. You joined in what, about 2010, 11, Bernie, if I recall correctly. So we've seen ups and downs, and we've seen thousands of practice sales.
Yeah, well, actually,
So
go ahead, Nick.
looks like most people are concerned. So about 50% say, yeah, possibly, but it depends on the policy changes specifically, which is true. I mean, it's like we're getting tariffs, we're not getting tariffs. It seems to flip flop every other day. About a third say, yeah, they'll definitely drop. A small percentage think, no, the market's still strong, and then some are just not sure. But I guess the vast majority do think that there's going to be a small to a significant drop.
Okay, well, in this case, the majority has some reason to think that. It's very paradoxical. I personally, as a practice broker, have never been more busy than I am right now. I'm dealing with 6, 7, 8 sales, which is an unusual amount at one time. We like to say that it is a lumpy business, but that's a very nice big lump. And so practices are selling, but what's happening is there's a split in the market, schizophrenic market, if you wish. The first-time buyers are very, very much affected by this uncertainty. First-time buyers by nature are very hesitant and prudent with good reason. Nick, can you take that down from the screen? The poll.
The poll will go down if you vote.
Yeah, you've got to vote for the poll
Right,
to go down, Bernie. It's not showing up for any of the rest of us.
Yeah. Anyway, so the first-time buyers are very hesitant, but the bedrock, or one of the bedrocks of buying and selling a practice, of course, is supply and demand. That hasn't changed much. We still have more buyers than sellers. The other bedrock is financing for sales, the banks. And the banks have not changed. They are still funding these sales in a manner unlike any other business is funded. 100%, prime minus a quarter, 1 to 2 years of interest relief, et cetera, et cetera. That has not changed. And the third bedrock of the market, which for the past years has been the DSOs, the corporate buyers, both large and small, the big ones who own hundreds of practices and the many smaller ones who own, let's say, between 5 and 50 practices. They are still buying, and they are not hesitant at all. So it is really affecting a certain segment of the market. The smaller practices, let's say under $2 million valuation, who are being bought by first and second time buyers. That's the part of the market where there is now a buying opportunity, because those prices, the valuations haven't dropped because they're based on all the other factors I just told you, but the offers we're getting are somewhat lower than valuation for that small segment of the market. Well, it's not small, it's a large segment of the market. So in a nutshell, yes, The people who think that practice values have gone down because of this have some justification for that, but it's more selling prices that have gone down. And if you're a buyer, now is a wonderful time to buy. What would you add to that, Bill?
Well, yeah, that's the key message. If you're listening to this and you're a buyer, oh my God, this is the best window of opportunity you're going to have. Because go back to that chart I showed you. Practices are going to do just fine no matter what happens in the economy. We've only got 45 years of history to show that. And you'll have less competition now than you would have in many cases. The only other thing I'd add, Bernie, and we've talked about this, is there is also a strong element of regional differences in this regard. Now, right across the country, it doesn't matter if it's in Eastern Ontario, the GTA, or out west, there absolutely has been a flight to quality. And we've seen this every time the market's had trouble. We saw it when interest rates spiked up to 7%. Great practices were pretty much still selling at the price they would have before, but people got a lot more focused on any practices with shortcomings. And let's face it, 8 out of 10 practices have at least one shortcoming. So there's been a flight to quality, I think, to some degree, but the regional differences are significant. We recently, my partner, Dr. Patty Ann Jones, and I had a practice for sale in a very high demand area, sort of Oakville, Burlington area in the GTA. And we had 40 people come out to the showings, and we received 20 offers. Or more. I think it might have been slightly more than 20 offers, and that practice will sell for meaningfully above the appraised value. It is regrettably kind of the exception that proves the rule, but I think if you're a buyer, this is the sweet spot. Move quick before people figure this out. If you're an owner, what it does say is it's really important to sit down with somebody and talk about the strengths of your practice and the opportunities in your practice. And I don't think that's going to change. This is becoming more and more of a business all the time. And understanding your business metrics, how they compare, and what levers you can pull is going to become, is now far more important than it has been, and will be even more so going forward.
Yeah.
Now, out of curiosity, is CDCP playing a role to offset these concerns?
Yes. Look, anytime you have billions of dollars injected into any segment of the economy, it's going to make a difference. I mentioned earlier there are certain areas that are going to be affected by layoffs, et cetera. CDCP will definitely pick up that slack. We are starting to see it in those practices that are accepting it. Quite frankly, most of the practices I'm dealing with are accepting it on a more limited basis, but I talk to a lot of people about CDCP, and more people are accepting it. Certainly for the larger DSOs, where they need a constant stream of new patients, it has been a boon. But as we keep repeating, those of you who listened into our previous CDCP presentations, it's all about the balance billing. It's only going to help your practice value if you balance bill. If you are willing to take on average a 15% haircut, you are in effect taking a 50% haircut, because most practices, after everybody's paid, including the dentist, are looking at 20 to 30% left on the bottom line. And if you take 15% away from that, you are taking away a huge chunk of your bottom line, and your practice value is dependent almost totally on a multiple of that bottom line. So at a 6 multiple, for every dollar you're losing $6. $10,000 becomes $60,000 loss in value. We cannot emphasize strongly enough the negative effect of not balanced billing that negative effect will have on your practice value. But to answer your question, Nick, absolutely, it's helping. And my prediction is it's really going to help a lot in those areas most heavily affected by the tariffs.
And the other thing I'd add, well, two things I'd add. First, reinforcing Bernie's point about balanced billing. When I said there's a flight to quality, if you are not balanced billing, you are going to have a very hard time selling your practice. It's the first question out of virtually every buyer's mouth these days. Nobody wants to buy a practice that's locked into being dependent only on government funding. So just underscoring Bernie's point in that regard. The other thing is, for those of you, most of you on this call will have seen some limited impact in your practices. The key thing to remember is that so far, it's only been about 40% of the population that is now eligible this month, and as we trickle into the next couple of weeks. And only half of them have sought or received treatment. So when you look at the numbers relative to the full population that will be eligible for CDCP, only 1/5 have sought treatment. That critical 18 to 65 group is eligible now. I think the youngest group within that can't apply for another week. But and while I don't think everyone who's eligible will seek treatment in any given year, what you've seen so far is, my guess is, just a third of what will be coming at you in the coming year. And honestly, I think that will not only, as Bernie was saying, offset potential losses in practices that are in towns hit more heavily by the economy, it's going to boost all the rest. So it's the other reason why, set aside CDCP, there's no historical data that says you need to worry in a standard practice about more than a 2% decline. And on top of that, we're dumping $4.5 billion into a $22 billion industry. Again, purchasers out there, oh my goodness, you're not going to have this opportunity again.
Now, are the tariffs having a bigger impact on supplies, equipment? Is that what's going to take a huge increase? What's the impact there on the supply side?
Want me to jump on that first?
Yeah, you have the latest information.
Yeah, one of the benefits of Bernie and I selling the business to Henry Schein is we've got the ability to really understand what's going on in that area, Nick. And I would say there's sort of two very different categories of impact. The first is tariffs that are being placed on goods coming from the US into Canada. And there was a fair level of concern in the industry right out of the gate because a number of things were going to be subject to tariffs. It had been announced that, say, what was it? It was toothpaste, it was fluoride treatment and varnishes, anything metal-based as soon as we got into the tariffs on steel and aluminum. So things as simple as the clamps for a rubber dam or wires for braces. But that was rescinded almost immediately by the Canadian government for any healthcare-related products. And that's been pretty all-encompassing across dentistry other than whitening. So the impact of tariffs on coming into Canada is negligible. The longer-term issue that we have not seen yet is the increased costs being borne by US-based manufacturers if any of their materials are subject to tariff. So if you're making dental chairs in the US and you've been using Canadian steel or Chinese steel, your costs are going up. If you're a big distributor, like Henry Schein, you have been buying in bulk, bringing it into the US and redistributing across North America. If those products are being sourced from countries that are now being tariffed going into the US, that's going to get passed along as it ships into Canada. So there's real efforts going on right now to completely reconfigure supply chains to run around the US. None of us knows what's going to happen in terms of the tariffs going into the US, other than it's going to be highly variable. Bernie was saying that you can chime in a second and say what you heard this morning, but so far very little. I think we'll start to see some cost increases on some things over the summer is what I'm hearing. But the two key things to remember are A, your provincial associations have been excellent at making sure the suggested fee guides recover any real cost increases people have seen. They did a brilliant job of that through the very significant changes during COVID. And B, supplies just aren't that big a cost of running a dental practice. The average practice out there, you should have supply costs at 7% of your revenue. And so if tariffs impact some of the stuff you're buying, it's going to be like even a 10%, if it impacts 10% of the stuff you're buying, that's probably all it's going to do. And it won't be, if it's 25% on 10% of what you're buying, it's negligible in terms of the real impact on your business.
I'd like to address the question in a little broader sense, Nick. I hear a lot of rumblings from my colleagues, from dentists, about the cost of supplies, and that distribution companies like Patterson, Shine, Sinclair in Canada, price gouge. These guys are making a fortune. Part of my very checkered background is I was actually an officer and shareholder of one of those companies. For the older people on the call, Ash Temple, which was bought by Henry Schein when they moved into Canada. That's how they moved into Canada. And I can tell you that, like any retail distribution business, whether it be a grocery chain or a dental supply chain, those margins, net margins, are very small. It's all about volume. That's how you make your money. And the only way you get to volume is if you are price competitive. It's a very competitive business. You have the big three I mentioned in Canada, and you have a bunch of smaller ones who are constantly price cutting. If you want a number, when I was with Ash Temple, if at the end of the year, for literally hundreds of millions of dollars of investment, if we made 5, 6, 7% at the end of the year before tax, that was a good year. This myth that's out there in the profession that supplies are way overpriced and that these companies are gouging and making a fortune is just that. It's a myth.
Now, from what I understand, the equipment sales is actually up right now, isn't it?
Yeah. Bill and I were at a presentation and we heard that and everybody looked at each other. What? There's uncertainty.
Are they all trying to buy up before they think this crazy tariff is going to be put in place, or is there fear?
Bill has a take on it. My take is that the people who tend to buy equipment, there are two. There's those who are starting practices and you have no choice. You have to buy equipment. The discretionary sales are usually in older practices that want to upgrade and keep current, et cetera, et cetera. And those usually are the more successful practices. These are people who have built great practices, want to keep them up to date, and know, maybe instinctively, they haven't seen Bill's graph, but they know instinctively that this is a good industry and that their patient base and their revenues are pretty solid. And they're doing what they would usually do, buying equipment. That's my take.
Yeah, I think that's exactly right. Nick, I do think that there have been some people worried that costs may go up significantly and therefore buying now when they might have bought later. The reality is there's not a lot of reason to believe costs will go up significantly, as I was saying earlier. But I think it also speaks to just how fundamentally, and I know when I say this, there are going to be people out there who go, Henderson, you don't know my business. You're way too optimistic. The industry is in great shape right now, notwithstanding the long-term threat from CDCP, which we've talked about in the past a lot. Practice revenues broadly across the country are up, and the CDC is going to fuel more growth so long as you're balance billing. And so I think one of the drivers of equipment sales is the industry is doing very well, which is invariably going to mean people need more equipment. 9 million Canadians will qualify for the CDCP. And if a bunch of them have not been going to the dentist and now start, people need more chair time. And sometimes that means they need a new op. Plus, I think the other factor is there's definitely a trend towards investing in technology, which is necessary given the impact of staff shortages. Technology is a way of addressing staff shortages to some degree.
Absolutely.
In certain areas. I think that has also driven some of it.
Yeah, and going back to my Ash Temple days, dentists are very slow adapters of new technology. So even what are considered no-brainer technologies now, like digital x-rays, it took 10 to 15 years to roll that out.
Yeah.
And the big one now are digital scanners. And we're just in the middle of that rollout. And more and more offices are now realizing that the scientific term is the goop impression is really not what patients expect. And you're seeing a lot more digitization, especially on the scanner side.
Yeah, it was interesting. And when my wife had you go to different practices for a procedure, and some of them are very modern, like high tech, and some of them they give you the goop, and it's can be pretty jarring, when you switch from one to the other. But we've got another 3.5 years of Trump, right? So how do you both feel things are going to play out over the next 2-3 years? Because I guess there's two perspectives here. There's the younger dentists who are finishing school. They're looking to open up their first practice. What does their next 3 years look like? We've also got the dentists who are currently running a practice. They're kind of halfway through their career. But we also got plenty of our clients. They're looking to sell their practice in a couple of years. They usually come to us because they want to grow it. They want to drive more patient flow. So the objective being, 2-3 years they want to get out. So what are their 3 years look like?
I'll go first if you want, Bill.
Yeah.
As I said before, the ultimate determination of your practice value is supply and demand. If you live in an area of the country where the supply of dental practice for sale is smaller than the demand, more buyers than sellers, that would be most parts of Southern Ontario, Southern BC, to a certain extent, Alberta, less so in almost every other province. Your practice values, my cloudy crystal ball says, over the next 2 to 3 years, your practice values are going to stay pretty good. The other great determinant, of course, are interest rates. And I think with all the economic uncertainty over the next few years, I don't know, Bill's more versed in the economic side of things than I am, but I think that's going to slow the cutting of interest rates. And anytime you have an uncertainty, the central bankers tend to, as they should, err on the side of caution. So interest rates will probably stay where they are, which are giving us 5.5 to 6.5 multiples for the individual buyer, slightly higher ones for the corporate buyers. So I think you're pretty good over the next 2 to 3 years. If you've got a smaller practice and you're going to be selling to an individual buyer, I'll stand by what I said earlier. Economic uncertainty, next 2 to 3 years, they are going to be more cautious. And getting full asking price on those practices, I think over the next 2 to 3 years with uncertainty is going to be uncertain.
Yeah, I don't disagree with anything you've said, Bernie. The thing I keep focusing on is none of us can predict what's coming. If there's one thing we've learned over the last 4 or 5 months, none of us knows. And if you don't like what was happening yesterday, turn on the TV today. But the one thing that the administration to the US is definitively not going to do is remove all the teeth from mouths of Canadians. Your patients all still have their teeth. They all still need proper hygiene care. They all still need dental care. And the graph we led with at the front end shows that they will continue to pay for dentistry no matter what happens to the economy. Plus, on top of that, a lot of people who have not been able to get care now will be able to get care. People who couldn't get all the care they needed will be able to get more care. So I remain very optimistic about the next 3 to 5 years. The 45 years of history has shown us the economy is not going to take a significant toll on dental practices. Now, there is one big cloud on the horizon that I wouldn't want to leave this without. Bernie's already talked about it, and I've mentioned it. I'm not worried about the economy. I'm not worried about tariffs. I think it's a wonderful opportunity for buyers right now. I think that will dissipate as everyone gets more used to the shell shock we experience daily. The DSOs are, in my opinion, getting more aggressive now. But the one big question mark is whether dentists are going to balance bill in the CDCP. And let me be as blunt as I can be. If you are not doing that, you are hurting your practice, your personal net worth, and risking the profession. We know that the politicians did not want you to have the opportunity to balance bill. The provincial and national associations did a fabulous job, in my opinion, and I've not always been their biggest fan, but on this, I really have been, of getting you that right to balance bill. But if enough people out there do not do that, you give the politicians all the ammunition they need to take that right away. So I think it's really important you continue to support your provincial association, the national association. The risks of de-insurance are real. The risks of losing balance billing, I think, are real. I don't know how significant. That is the only thing I'm concerned about going forward. And I suspect, Bernie, you're going to disagree with me vehemently.
Not on anything you said. I'm actually going to add to what you said. You've done a very good job of emphasizing the most important thing. The second cloud on the horizon is de-insurance. And that is something the profession has absolutely no control about. What de-insurance is companies and unions saying, well, if the majority of my members or employees are going to be covered by CDCP, why do I need to pay my 50% of a dental plan? Use the CDCP. And that, to me, is another very large risk. Really, the foundation of Canada is constantly ranked amongst the best countries in the world for oral health care. And the foundation of that are the 70 to 75% of our population who are covered by private dental insurance. Has been for decades. And that is at risk. And unfortunately, there's nothing the profession can do about it. It's one of those unintended consequences that the politicians never think about when they establish a plan like CDCP.
Just to share some stats on our end, because we work with hundreds of different practices across US and Canada. We monitor how many calls they get, how many patients they're signing up, what they're spending for, to get someone on the phone. there hasn't been a significant change. So if we look at my stats here, in November 2024, on average, it cost about $103.39 in marketing investment. And this is, we're talking, we spend millions a year of like dentist money to try to get them phone calls. So it's a lot of data. It was costing about $103 to get a new patient on the phone. Then if we look at 2025, so in January, because when did he enter office?
January 20.
January, okay.
Yeah.
So in 25, it went down to $101 to get somebody on the phone. And now in April, it's about 109. So I guess maybe went up a little bit, but it's within the realm of like a deviation, right? So not much has changed. And even if you look at, okay, now that's a phone call. It doesn't mean that the patient sign up, right? But if we're looking at signups, there hasn't been a big change in that either. It cost in 2024. So November 2024 was costing about $257 average for them to get one new patient. And when you think about, what the average patient will spend in the dental office, even just like the first year, it's a phenomenal return on investment. And again, that's average. Some of them get, acquire patients for significantly lower than that. But now in April 2025, it's still $261. So if we look at our data, I mean, it's just as easy to attract patients as it was before he joined office until after. It costs just about as much to get a patient. So things are looking good on my end in terms of, trying to drive patient flow. It hasn't gone up and hasn't gotten more expensive. And then when you factor in inflation and things like that, I would argue that's actually getting cheaper to get a new patient. Right. But we saw this during COVID too, when there was like a big scare. A lot of people started turning things off, stopping their marketing. And it actually turned out during COVID, it was one of the cheapest times to get patients because you'd have basically no competition. Like you're not competing against anyone. Everyone stopped spending money. So if you're one of the ones that, stayed calm and carried on, you'd have grown significantly. Right. So I think that when people get into a panic and they start stopping progress, it's like, let's sit back, let's see how things play out. I think it's a detriment. I think that, you should just push forward. The industry is pretty resilient. From our data, acquiring patients is just as easy as it was before Trump was in office. So I think the biggest risk is if you go into a bit of a panic and start just changing a formula that frankly works pretty well. It's worked pretty well for the last 50 years.
Yeah, exactly. I'm trying to remember that novel, A Tale of Two Cities, that I studied in high school. I doubt if it's still being studied. But the opening line is, and the closing line are, it was the best of times, it was the worst of times. I think it's the best of times for dental practices. It's the worst of times for certainty in the economy. And every dentist should thank their lucky stars that they are in a profession where they are so resilient and so resistant to economic uncertainty.
Yeah, it's a profession that creates a lot of value for, a very large customer base. So, no matter what's going on in the economy, your teeth hurt, you're going to the dentist. So that's not going to change anytime soon.
Do we have any questions next, or can we encourage people to plug a question in there? I'm way more interested in answering questions than hearing Bernie talk.
Yeah, absolutely. So if anyone has any questions, if for our guests here, we'll keep things open for a few more minutes just to address them. And if not, then it's a short and sweet one. Can keep calm, carry on, and things are going well.
Yeah.
Far less going on in the chat than when we're talking about CDCP, I've noticed.
Oh.
Yeah, it's not as heated as a topic. CDCP definitely brings in a lot of opinions. Yeah.
Okay.
No, it looks like we don't. Either everyone agrees or they're sleeping at their computer.
Well, it's interesting you say that everyone agrees. The polling showed that everybody had some concerns, some real concerns. And we've basically taken the other tack. that you can have your concerns, but history and what we're seeing is that things are pretty good.
Yeah, I think it's as simple as human nature. As if we're generally concerned about what's going on, we're going to have a heightened level of concern for everything. And I don't think anyone on this call is suggesting there aren't some very significant and important things to be concerned about these days. But fortunately, for the vast majority of people on this call or will listen to the recording, your dental practice need not be one of those things.
Fantastic. Well, thank you again both for taking the time to share your knowledge and hopefully calm down the profession. So thank you everyone for joining us. You'll get the recording at the end of this. We'll send out a poll as well for other topics that you guys might be interested in that we can host. But thanks again, Bill and Bernie, and thank you everyone for joining, and we hope to see you on the next one.
Bye all.